There are many investors who say that, okay, it has been 6 months or 8 months. I have not seen spike in my mutual funds because the markets had gone down and market had gone up. So investors saying that, okay, I am having a crore of a portfolio or a 2 crore of the portfolio, but I'm not seeing returns in the portfolio. Isn't it there any fund which can give me returns even if the market falls down? So I think the God has answered your wish. And now there are funds which are called as the equity long short funds. Yes, equity long short funds means buying and selling happens within the same fund. But couple of things that as an investor you need to know. First and foremost, whatever I am saying is not a recommendations. And secondly, it does not, while it is a part of the mutual fund type of the investments, it is not mutual fund. It comes under minimum 10 lakh kitty that goes into SIF funds. So therefore, when you go for it, it splits the portfolio into two parts. First thing, there is no limitation on caps. It could invest in large caps, small cap, mid caps. So there is no limitation on the caps as such. Secondly, what happens ki there is 85% maximum allocation they can go for equities and 25% maximum they could go for derivatives. So why derivatives? For example, we are currently seeing how the market is. So if the market is not that much rosy or the fund manager expects the market to go down, so fund manager, what he will do? He will buy some of the stocks within the 85% category which are defensive in nature, or some of those sectors which are promising in going up. But yes, there would be many stocks which are expected to go down. I'm not recommending it or suggesting something, but just to cite you an example, as IndusInd Bank and one of the firms were being exited out of Nifty 50. So we had seen outflow of fund happening from IndusInd Bank. So with that logic, so IndusInd Bank, they could take, for example, a derivative positions if the derivative is there for the IndusInd Bank. So using derivatives in 25% of the corpus, they can sell the stock. So in fund management, what happens when you're going into these? First and foremost, it is not for the novice investor. It is a minimum corpus of 10 lakhs required, comes under the SIF category. And in 85, they are buying and holding the funds to go, stocks to go up. And 25, those stocks or sectors which they are seeing is bearish, they can sell those up. And then they could buy it at a later date once it goes down. So they are selling it at say 100 rupees, it goes down to 80, they buy it. So there is a 20% gain they make it. So this is how these things come up, and they provide much better risk adjusted returns. It is actually a category for those investors who are mature mutual fund investors, but maybe doesn't have either money or balls to go for PMS or the AIF funds. So this midway is one category. Through long short funds, they can go ahead. So this is how, if you really want to have fund on equity side, making money even when the market goes down. The best part of it is the returns are taxed at 2.5%, just like equity. Thank you so much.